we buy rental properties to create wealth, to create long-term wealth and income property, rental property. As you can see right here, Julie, you and I spoke about it, this topic many times over the years. And I have to reiterate that the attributes of rental property are not just cash flow, because on a historical basis, real estate asset class, income property is the most powerful and proven multi-dimensional real estate asset class, is the most tax favored asset class in the history of the world.
Mm-hmm.
And a lot of newbies and even a lot of experiencing investors, in their mind, just because somebody bought one or two or three rental properties in the past few years does not make them a savvy real estate investor. They could as well be newbie, as far as I'm concerned. I'm sure you'll agree, Julie.
Absolutely.
Because we have so many newbie investors, rookie investors, and the so-called experienced investors are still sitting on the sideline, okay, waiting for whatever excuses to happen. So they stay on the sideline. You know what's happening with people who stay on the sideline? Look at at least 4 dimensions of profit areas they are missing by instead of buy real estate and they wait to buy real estate. They're missing positive cash flow at 25% down payment typically. They're missing tax benefit, which we'll dive into it. They just don't know. By the time you and I finish this tax presentation, people would be shocked. There's so much tax benefit real estate investors are missing. So cash flow, tax benefit, appreciation, long-term appreciation, right? And the power of using a 30-year fixed rate mortgage, the power of leverage. So this high-level strategy alone will make somebody very wealthy long-term if they do things right. So what are your quick comment on this particular great high-level concept?
It's interesting. I think as a relatively newbie investor, but somewhat seasoned investor, because we were able to purchase 6 properties. Initially, my husband, I think like many people getting into the business, you only look at the cash flow because it's about, if I'm going to buy this, it should make money, right? Yeah, that is one aspect of it, being able to make money. But then since we've been able to have the properties for a few years now, we do understand the tax benefits, the short-term and long-term tax benefits, the appreciation, even though we've only had our properties for about 3 years at the moment. Yeah, because we started investing in early 2001. We have experienced appreciation on all of our properties, and our properties are not in a high appreciation area, but we have been able to benefit from that. And then, yeah, the power of the 30-year fixed mortgage allowed us to buy more properties than we would have had we chosen to pay cash outright, and then all the benefits that come with that. Yeah, those are 4 great strategies for why some would want to get into investing in property.
Yeah, again, so people need to have a high level, big picture perspective. They have to look at 5 to 10 year projection. So if you don't have this software, I use Property Tracker software, and you too as well.
Yes.
People focus on the first year return too much. Oh, little cash flow. But if you look at this pro forma, if you look at this sample real property that were in Florida, for example, the single family home, new construction, sell it for $264. And I'm not going to go through the numbers that much. At the end of the day, it's a positive cash flow of $300 net positive per month. Okay. I'm not going to go over the metrics and all that, but this is just a first year projection. Now, the beauty of owning property long term is this. I'm just showing the 5 years of return. Again, I'll be real quick about it. So if any investor, they need to look at deep dive. The first few years, they may not get the immediate above the surface benefit. Above the surface, we talk about, you and I, above and below the surface. Above benefit that we can see is cash flow and appreciation, and below the surface or the amazing tax benefit, which we can talk about, as well as in the loan amortization, paying down the mortgage, the tenant that is going to pay down, our tenant is going to pay down our mortgage as landlord. And if you quickly, again, I don't want to spend too much time on this because we have done other videos. We talked about this. With the inflation, going to help landlords. The inflation going to help investors to create wealth. One of the way the inflation is going to help is rent. We can raise our rent on a systematic basis. May not be year over year. It depends. 3 to 5% will be a good historical rental rate, because with rent inflation, us
Right.
landlord can benefit because we can raise our rent from month to month, year to year. As you can see,
Right.
this is just a projection. Year over year, our gross rent is going to be higher. That means the low cash flow we're getting in this particular example, a mere $300 per month. Yeah,
Right.
that's not going to change your financial life short term. This $300 positive cash flow, sometimes things happen and you may not see you may not benefit from it. But the key,
Right.
so don't worry about the low cash flow initially because
Mhm.
again, if you keep this property long term for 5 to 10 years, your cash flow will increase as you can see right here.
Absolutely.
Furthermore, okay, the expenses they will go up by inflation also, but at the same time, if you look at the income analysis, we look at our amazing 30-year fixed rate debt, which is
Mhm.
amazing. It's the eighth wonder of the world. Yeah, the cash flow going to go up, and then the principal reduction. We talk about loan amortization. The
Right.
tenant, each time the tenant make our monthly rent, they can pay down our mortgage,
Mhm.
pay down our loan balance. As you can see, the principal reduction keep on going lower, and principal reduction will give us a tax benefit. And
Mhm.
then the 5% appreciation. Appreciation is very important when you buy in a good location in a fast-growing area. In this case, look at 5 to 8% appreciation. The first year, the property already appreciated 22 grand. Then
Mhm.
year over year, some year you may not, and the property may not appreciate. We get that, right? There are some fluctuations as we have seen in the past couple of years. There's a lot of fluctuations going on in the housing market. But
Right.
over time, look at the appreciation. It continue to increase. Okay. And then, under the loan analysis, so when your property increase in equity year over year, hopefully you bought it in this case for 264.
Right.
Second year, third year, fourth year, fifth year, based on 5% appreciation, whatever. Look at the
Mhm.
market value of your property,
Right.
long term. And
Right.
then the loan balance, simple loan balance, continue to decrease.
Right. Absolutely. Mhm.
Amazing, right? The tenant is paying down our loan for us as landlord. The
Mhm.
loan balance decrease, the market value increase over time. Then systematically, you have year over year equity continue to grow. As you can see, the numbers grow amount of equity on just one property. And
Mhm.
then if you want to, what are the extra strategies? You can cash out refinance some of the equity
Mhm.
based on the loan to value. As you can see right here, you can cash out refinance, which is a tax-free
Right.
loan against your property, cash out refinance. That's the whole idea. This
Mhm.
potential equity you can cash out at any given year in the subsequent years allow you to leverage to buy more rental properties and
There you
scale the
go.
portfolio so you can achieve financial freedom at some point in time in the future, right? And
Absolutely. That makes a lot of
yeah,
sense.
so
Definitely.
yeah, so any quick comment on this 5-year
Mhm.
projection and the high level.
Yeah, I think it is. I think what you said, it's a 5-year projection, or it's a long-term strategy. That's actually a relatively short period of time, 5 years, but you can see the benefit of holding on to it. And if you scaled that out to 10 years, 15, 20 years, exponentially, the benefits are going to grow. Your equity is going to grow. The loan is going to decrease. You still have the tenants paying the mortgage, and your cash flow overall is going to increase the longer you have it. So it makes a lot of sense. But I think that when people are looking at doing an investment, you have to look at the long term as well as the short term. I think most people only want to look at, oh, am I going to make any money this year? But it's like you're talking about something, an asset that you can have virtually for a lifetime, and it will continue to pay you money.
Yep. So to conclude this graphic and the previous two slides, at the end of the day, the winners are the landlords and investors like you and I
Absolutely.
continue to buy cash flow properties and hold over time. And the losers are sitting on the sideline doing nothing, and they're foregoing all these 5 dimensions of profit
Right.
center on a
Right.
particular income property. So you know who you are out there. There's no reason to wait. Buy in the right market. Surround yourself with a good team. Buy cash flow markets. Surround yourself with great property managers and so forth and so on. So sitting on a sideline, it'll be a detriment to your financial health.
Absolutely.